Unless you have been living under a rock, you would have heard that on January 11, the Security and Exchange Commission, the SEC, approved 11 spot Bitcoin ETFs for trading in the US.
Well, a milestone moment for Bitcoin. Regulators have given money managers the approval to launch 11 spot Bitcoin exchange-traded funds.
So now, investors have a choice to invest easily in Bitcoin using their brokerage account. These funds are being run by some of the largest financial institutions like Fidelity and BlackRock. But do remember, these same big institutions were also actively trading mortgage-based securities before the famous economic meltdown of 2008. So while Bitcoin ETFs make it easier for investors to trade Bitcoin, they do nothing to reduce or change the risk associated with owning and trading Bitcoin in your portfolio. It's just the old wine in a new bottle. As an investor, you must know the few critical risks associated with these Bitcoin ETFs. And before this video ends, you will see why the SEC approval is in no way an endorsement of Bitcoin by the SEC. But first, what really is the Bitcoin ETF? ETF stands for Exchange Traded Fund. It's simply a fund, like a collection of stocks that trades on a stock market like a regular stock. It is different from a mutual fund that trades kind of once a day, where the price changes at the end of the day after the stock market closes. So Bitcoin ETFs allow investors to sort of trade and participate in the allure of Bitcoin without having to directly own Bitcoin or worry about safely storing that Bitcoin. So any investor having a brokerage account like Robinhood can easily buy a share of these Bitcoin ETF and own an exposure to Bitcoin, just like they would be buying a share of, say, an Apple or a Tesla. Before these ETFs were approved, the only way to trade Bitcoin was to do through a crypto exchange like Coinbase. And such investors also had to make a decision about how they wanted to hold their Bitcoins. They could have left them under the custody of the platform itself like Coinbase, or they could have taken ownership of their Bitcoin in their own digital wallets. Another way to look at it is that these Bitcoin ETFs are similar to gold ETFs that have existed for many years. So a gold ETF allows you to invest in gold without having to physically own the gold bars. I love investing in gold ETFs. I think I'll go ahead and get started with investing in Bitcoin ETFs now. Wait, while you can always do that, you must know all the risk associated with making that decision for your hard-earned money. The biggest reason for avoiding a Bitcoin ETF, it's Bitcoin. Bitcoin is an exciting investment class, and I myself have investment in Bitcoin, but it's a fact that Bitcoin is a very volatile asset at this time. So for most of the investors and general population, Bitcoin should either be completely avoided or should have a very small exposure as part of a well-diversified portfolio. Bitcoin has a history of crashing up to 80% of its value multiple times. Not every investor can handle such wild swings. Fear and greed are the two primary drivers behind Bitcoin's volatility. And because of that well-known volatility, investors always fear that they're going to miss out on a big upswing, or they are going to be destroyed by a big crash. This in turn causes many of them to panic and do either panic buying under FOMO, fear of missing out, or panic selling. In either ways, it causes wild price swings because many people do that. Fraud and manipulation have also been regularly shown to impact the price of Bitcoin. Such risks continue for Bitcoin and in turn for its ETFs. And know what? Bitcoin is unregulated, even after its approval of the ETFs by SEC. And that's the biggest worry I have. In all this hype about approval of Bitcoin ETF, it may seem like there is now a new regulatory oversight over Bitcoin. That's simply not true. SEC approval and creation of these ETFs surely helps investors in that it creates certain parameters and regulations around how these companies can promote these ETFs and handle investors' money. So the protection is in terms of money being handled. However, Bitcoin itself is not regulated by any authority or organization. Now, this lack of authority or regulation is actually a selling point for crypto because it provides some level of anonymity. But it's a bad news if something were to go wrong.
Bitcoin itself, we did not approve, we do not endorse. Investors, I think, should be aware that the underlying asset is a highly speculative, volatile asset, and amongst its use cases is really for illicit activity, money laundering and sanctions and ransomware and the like.
And remember, the majority of cryptocurrency trading and transactions happen outside the borders of the United States. Imagine if some major fraud happens on Bitcoin, even outside the US, it may impact user confidence and the Bitcoin price across the world. Then if that leads to Bitcoin price crashing, all these ETFs tracking Bitcoin price will also crash. And there is nothing that regulators can do about that. That may be, but isn't SEC approval a sign that these Bitcoin investments and ETFs are safe for everyday investors now? Not really. The SEC approval of ETFs does not mean that these are safe for investment. Here is what Gary Gensler, the chairman of SEC, said in his statement after approval of these Bitcoin ETFs. I would note that the underlying assets in the metals ETP, he's talking about gold and silver, they have consumer and industrial uses. While in contrast, Bitcoin is primarily a speculative, volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. While we approve the listing and trading of certain spot Bitcoin ETF shares today, we did not approve or endorse Bitcoin. Investors should remain cautious about the myriad risk associated with Bitcoin and the products whose value is tied to crypto. See, in August 2023, the SEC lost an DC Circuit Court appeal with Grayscale Investments over whether SEC needs to reevaluate its decision to reject Grayscale's application about converting its Grayscale Bitcoin Trust into an ETF. These kind of force SEC's hand into approving these ETFs. So in the announcement, Chairman Gensler made it very clear that SEC does not approve or endorse Bitcoin. But these ETFs approval were the most sustainable path forward after its defeat in the court. But SEC is likely to be very strict in its regulation of these ETFs, and these may lead to some unforeseen circumstances. It may be prudent to wait for some time and allow things to settle down. Hang on, I'm sure these big firms like BlackRock and Fidelity will not sell these ETFs to regular investors if they were too risky. While Fidelity promptly launched its Bitcoin ETF, check out what they have written on the first page of their 112-page long prospectus. An investment in the trust involves significant risks and may not be suitable for shareholders who are not in a position to accept more risk than may be involved with exchange-traded products that do not hold Bitcoin. The shares are speculative securities. Their purchase involves a high degree of risk and you could lose your entire investment. So Fidelity is clearly telling that these Bitcoin ETFs are way more riskier than their other regular ETFs. Don't treat them the same. On the other hand, Vanguard has simply refused to offer any Bitcoin ETF. Vanguard is the largest provider of mutual funds in the world and second largest provider of ETFs after BlackRock's iShares. Vanguard is known for its conservative investing approach, popularized by its late founder Jack Bogle. One of the key principles that Bogle followed was about investing in assets that generate cash flow, dividends, and interest payments. Bitcoin does none of these. In other words, Bitcoin is pure speculating, something that Jack Bogle did not consider worthy of investment. So here is the bottom line. If you were an investor who was already investing in Bitcoin through crypto exchanges like Coinbase, these ETFs offer you a more convenient option of trading Bitcoins. But if you're somebody who is just considering to start investing in Bitcoin or other cryptos, remember, SEC's approval of Bitcoin ETFs does nothing to change the risk associated with Bitcoin as an investment option. Don't let the excitement of ETF approvals rush you into buying Bitcoin. Do a detailed analysis of risk and rewards. And after that, if you decide that you would like to have a small exposure of Bitcoin into your well-diversified portfolio, go for it. And yes, then you can take advantage of these new ETF options for convenient investments. I would love to hear your thoughts about these Bitcoin ETFs. Are you planning to trade on those? If you like this video, I strongly recommend checking out this other video. I would also appreciate if you can give a thumbs up to this video and subscribe to the channel. Thank you.